Recording.
Hello and welcome to Portfolio Matters. Today's share talk will be about Hochschild Mining, a silver miner with operations in Peru, Chile and Argentina. I hope by now that you have caught Richard's presentation on the silver market and how there may be a developing supply-demand gap in silver, which is bullish long-term for the silver price. But before we get into it, Richard will read the disclaimer.
Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. A full disclaimer can be found at the end.
Thank you, Richard. Okay, Hochschild Mining is a London-listed silver miner with operations in Peru, Chile, and Argentina. It's big. Market cap is close to £1 billion. Now, I think you will find this interesting. It's a COVID recovery play, which is not without risks, but I think it could be a good play on silver going forward. And I don't think there are structural issues. So the reason we are doing this share talk is that A, I hold a lot of this company, and B, the share price is down £3.17 in August last year to £1.92 now. So the question I wanted to answer was, is there a structural problem with this company? And I don't think there is. So if we look at the share price, you can see that in March last year, the share price collapsed to about 80p. Now, I bought it soon afterwards. So I'm actually, when it got to August, I thought, God, this thing is a rocket and I'm going to be rich, rich, rich. And then obviously it's come off. So it's a good job I didn't follow the usual advice of stock market gurus and buy your winners.
It is, yes.
So, positives about Hochschild. It is cheap compared to its peers. It's got low debt. In fact, in its latest report for Q4, which was out last week, it said it is now net cash. It appears highly geared to the silver price, and we'll show you that chart later. And it claims that the mine disruptions due to COVID, which occurred during 2020, are now over. It recently bought a rare earth element deposit in Chile, and Richard and I are very bullish on rare earth elements because of the clean energy transition. And it now that it's cleared the debt and it has net cash, you would hope that it could fund share buybacks and dividends. Now, but there are very significant negatives. First of all, Eduardo Hochschild sold a 12% stake at a 15% discount to the market price earlier this year, and that was at a price of £2. There's also very substantial supply disruption. In fact, I can't think of another miner that's had more COVID disruption. You'll see that output essentially halved. And it also makes a great play of prioritizing its workers' health over production. And that has led to very substantial costs. So it continued paying workers' salaries, even when they were off, and it's made a great play of prioritizing their welfare, but that means the costs were up, revenues were down. Obviously, gold and silver prices are slightly down from their peak. Now, a big thing is that COVID cases are rising again in South America. And given the disruption that occurred to Hochschild Mining last time there was a peak in COVID cases, then the danger is there are further supply disruptions. And as a result of the disruptions to production, the all-in sustainable cost of their gold and silver production is very high. So what does Hochschild Mining do? Well, it's got big operations in Peru and Argentina, and it's got this new rare earth element opportunity in Biolatinidos in Chile. And I think that rare earth element opportunity is interesting because it's very cheap. It's of the best sort of rare earth mineralization, which is in a clay.
Mm-hmm.
So disruption. Between March and mid-May, silver production fell 53%, gold production fell 43%. Frankly, I can't think of another miner that had anywhere near this amount of disruption.
Yeah.
Also, the chairman has sold the part of the family interest, and you have to ask why. He could have sold it at £3 earlier in the year. Is this a vote of no confidence in the future of the company? And I personally can't see any reason for that. So let's talk about this new rare earth project. So it's bought an ionic clay deposit. Now this is interesting because these ion absorption clays are the cheapest way of recovering cheapest deposits. Basically, you don't have to drill any rock. You just extract the clay, you wash it to get the rare earths out, and then you return the clay. So it's really quite environmentally friendly,
right,
and it's cheap. But obviously, that's just an opportunity. It's not, this is in the future.
Is there any indication of the potential financial contribution from it, Keith, at this stage?
No. I mean, frankly, Richard, this is years in the future, because you'd need to actually, build the mine and build all the facilities, etc. So this is just a quick chart talking about ion absorption clays. Now, a lot of rare earth element deposits are in rock, where the rare earths are actually within the crystals. You had to crush the rock, etc. And it's a lot of effort to get it out. When it's in a clay, essentially it's weakly bonded in the clay, and all you need to do is wash the clays, and it comes out. So it's got a good portfolio of opportunities, and it is actively exploring. So this, this is a mining company with potential. Obviously, there's been disruption to exploration this year with COVID. So this is from the 2020 annual report, and it shows that the that net debt is declining. In fact, now it is cash positive. So the net debt is negative. We now have net cash, and it has been paying dividends, although the second half 2019 dividend was withdrawn. Now, it's forecasting a good dividend for 2020, but frankly, I'm going to question that. So when we look at the results for the 6 months to June, you'll see that they were frankly absolutely terrible. The gold and silver production halved. Revenue was down massive amount, 35%. And so they were loss-making.
Yeah.
And this chart shows how, basically, there was an increase in COVID. Well, there were COVID stoppage costs as they continued to pay worker benefits even when they were in quarantine, and there were substantial costs due to COVID initiatives, including ongoing testing. So they're testing every worker every day, and quarantine costs, and those are going to be ongoing in the near future. There's also, you see in the red circle, there's working capital issues, but that is not a problem. The working capital issue, as you can see here, is just because they're doing less activity and therefore their trade payables reduced. Now, they claim to be undervalued relative to their peers. In fact, what they mean is they are in the mid-range. They're not cheap compared to their peers, but they are cheap compared to the most expensive of their peers. Now, one thing that I worry about is that COVID cases are picking up again in South America. And given the amount of disruption to Hochschild last time that cases hit a peak in South America, you wonder whether ongoing operations will be severely disrupted again.
So I guess a new dimension that comes into the stability of the environment in which you're mining now is the health stability, isn't it? Yes. How capable is the country of managing COVID over the next, call it 10 years? And that's different to political stability.
Yeah.
But it's probably becoming now an important consideration when investing in mining.
Well, in this case, Richard, you're absolutely right. I mean, the output halved.
Yeah.
And if we have that again, you go from a decently profitable company to a loss-making one.
So I guess my point is, if you take two equivalent countries with equivalent mines, one of which is able to keep on top of new mutations and maintain an efficient, effective vaccination program for its population, and one that isn't, the one that isn't will have a series of mine shutdowns, and the one that is able to do so will have no mine shutdowns.
Yes.
And the profitability impact on that is, as you say, huge.
Yeah. Okay, so these are the numbers out of Stockopedia, and you'll see that operating margin in 2019 was 11%. Decent free cash flow. Net a large amount of cash, and is now net cash as opposed to net debt.
Yeah.
This is the dividend history, and you'll see the dividend has been growing quite strongly until the second half of 2020 when it was cancelled.
Yeah.
One thing that is of a great deal of concern is that going forwards, the production is not being forecast to return to 2019 levels. So in 2019, they produced 465,000 ounces gold equivalent. Now the 2021 forecast is only 360 to 372. So despite saying that the COVID disruptions are past, they're not forecasting production to get back to normal. And I haven't really been able to get to the bottom of this. There are ongoing issues and disruptions, and it may well be that they are expecting those to continue in the foreseeable future. Now, there was a webinar with analysts last week, and they're promising to post the transcript onto the website, but as yet it's not available. So I haven't got any details on that, and I would hope that to listen to that and find out a bit more detail. But the bottom line is, going forwards, their 2020 forecast, so historically their 2020 forecast before disruption were in the region of 460,000. There's no structural reason why production should have fallen. But they're clear.
Projecting ongoing disruption due to COVID?
Yes, well, that must be it. And as you see, the flip side of that, the reduced production at the same cost means your all-in sustainable cost per ounce has shot up. from $965 in 2019 to a forecast $1,200 per ounce in 2021. None of this is good. It does, however, have cash. So this chart shows the share price of Hochschild compared to gold and silver. And as you can see, it seems actually to be quite geared to the silver price. So potentially this is quite a good way of getting exposure to silver if you are bullish on silver. So in summary, this is an opportunity if you believe that Hochschild can negotiate COVID and that COVID will eventually come to an end, the disruption will come to an end, and it will get back to the situation it had pre-COVID. But in the short term, frankly, expect more volatility and disruption. So I'm holding and I have no intention of selling, but will the price recover in the short term? Don't know.
Thank you very much, Keith.
Okay, well, thank you all for listening, and we hope to see you again soon on Share Talk. Please press like and subscribe to the channel. Goodbye.
Goodbye. Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from the use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.